Evan Caron, innovating climate solutions through Venture Studios. In this episode, Dr. Jemma Green is joined by Evan, who has transitioned from being an entrepreneur to co-founding Montauk Climate, a hybrid venture studio and investor platform. Evan shares his journey, the differences between venture studios and traditional venture capital, and showcases innovative projects focused on sustainability and climate adaptation. Discover how Evan and his team are creating impactful businesses and driving the energy transition forward. I'm your co-host Anthony Pearl, and whether you're an investor or a startup looking for insights, it's time to get unblocked.
Evan, welcome to UnBlock'd. Thank you so much for joining us on the podcast. Great to have you today.
Thanks for having me.
Now, Evan, we've known each other for quite a while, and actually when we first met, we were both working as solely entrepreneurs, and it's quite interesting that how our careers have unfolded is somewhat parallel kind of aspects to it. And now you're also not only an entrepreneur, but you're an investor focused on sustainability tech. Could you tell us a little bit about how that transition or that augmentation came about, and how are you finding the work that you're doing today?
You look back and you look at the journey of being an entrepreneur, especially in a sector like the sector we were in terms of like emerging tech, blockchain, climate, and this was like 2017, 2018. I recognized very early on in that process that the great big idea that I had was interesting to explore, but then execution and building a team was a skill set that was not something that I wanted to spend a lot of time on. And so I recognized early in that journey that, the 0 to 1 was the most exciting and fun for me. And then really playing to the strengths that I developed on Wall Street as a trader around kind of trying to see around corners and trying to bet on where the market would be. It felt like the opportunity to spend more time on the investment side and go early was able to kind of check more boxes than just being a solo entrepreneur on an individual mission to build one company. So I had the opportunity to spend a little time with Riverstone, the private equity group that I worked at previously. And really the idea there was to develop other entrepreneurs' ideas with capital and support early stage idea formation, early stage team development, early stage go-to-market. And that's where I liked spending the most of my time. And so that's kind of the reason why I felt like I did everything that I was needing to do at the company ClearTrace, which was previously Switch, hired a great executive team, brought in the first big customer, brought in meaningful venture capital. But the execution part, the sales part, that part of the journey was not the most fun for me, right? It wasn't like an ego thing where I needed to be CEO. So that's the reason why I'm here where I am now. The platform that I run and co-founded is a platform called Montauk Climate, which allows me to actually do both. It allows me to come up with big ideas because we're a hybrid venture studio and venture investor. It allows me to come up with big ideas, big swings, 0 to 1, build teams, build conviction in a concept, develop research, do deep exploration. So it's very kind of entrepreneurial, but also allows us to wear the hat of investor because we're deploying capital as well. And so it's kind of a long journey, a marooting journey to get here, and we're where we are now, which is great.
I was just going to pick you up on the idea of that difference between venture capital and venture studio, because I think that's a really important differentiation that probably not a lot of people understand, but it does allow you to play in a different way.
Yeah, I think we are lucky, and I have a lot of gratitude to my co-founder and our first investor that has given us a lot of flexibility to kind of explore how to both invest our time and invest capital. And we launched about a year and a half ago, 2 years ago. I met Philip Krim, who was the CEO and co-founder of Casper Mattress, the sleep company that IPO'd in 2017 or 2018 and kind of grew that business to north of $500 million in sales and basically redefined a category in a legacy market. And we came together through just good fortune and having a big network in the US. And we spent a little bit of time kind of co-incubating an idea around battery storage for homeowners. And we said, this is fun. Like, this actually was fun. We had a good time, identifying a problem, trying to solve it, bring a team together, identify first investors. We did that again unofficially with a platform called ElectronX, which is an exchange that a soon-to-be registered CFTC derivatives exchange for the electricity market, where we were the co-CEOs for about a year until we found a really great co-founder and CEO to run the business currently. And we said to ourselves, what do we want to do with our time? Like, we can do almost anything. What is the best use of our time and resources? And the light bulb moment came on when we said, well, we've technically been incubating businesses and we've been technically operating as a venture studio without a team. So why don't we go and build that ourselves? And so the distinction between a venture studio and a venture investor is the venture studio is actually building the businesses from the ground up. They're not investing like an accelerator or an incubator, like a Y Combinator, where a team and an idea come to a platform and they give them homework and they program to go and graduate through like a cohort or a group. We are very much in the business of underwriting key themes in the market in terms of energy transition, sustainability, climate. We spend months and or more than many months doing deep exploration and research. And then once we believe we have conviction in the idea, and by conviction, we mean that not only do we believe it, we're not in an echo chamber, but we have other people validate the concept either through early stage investors or team or really deep subject matter experts. Then we basically go and build that and launch those businesses as separate companies where the studio owns and retains meaningful ownership, but we're really acting as a co-founder to these businesses and kind of in the 0 to 1 timeframe. Where we differ from a seed fund or a pre-seed fund is that we're not writing $100,000 or $250,000 checks to pre-existing companies with an entrepreneur and co-founder and an idea. We are basically kind of self-selecting and creating our own businesses from the ground up. What we recognize as a platform is that climate and sustainability requires a multi-phased investment process, right? Early stage all the way through late stage. And we recognize that if we built a venture studio, we would have really good insight of what's happening at the ground level at like 0 feet off the ground. And we'd be able to, it would help us inform how we think about investing in later stage teams, how we think about team dynamics, how we think about cap table, how we think about growth. And so really it was our first true incubation was building a venture studio. And then we've now graduated our business after a year into thinking about expanding how we deploy our time and how we deploy our capital.
Thanks for distinguishing between like what is the difference between like early stage investing versus a venture studio, which is, you're really co-creating the company from inception. And in doing that, you have a deeper understanding of what's happening that allows you to have higher commitment investing at later stages across the market.
That's right. Yeah, it's idea flow. It allows us to be founders and connect directly with founders. And there's a lot of climate funds. There's like 200 plus climate funds. What makes us different than another climate fund? It's the money is the money, right? So you have a term sheet A and a term sheet B. What really gives us permission to be better than another investor? And it's a question of what additional value add do we bring to an early stage company? And we feel one of the big value adds is that we are founders and we're in the trenches as well. We know how complicated it is to get to a business to an inflection point where it becomes a thing rather than an idea. And I think we're a glutton for punishment because we're doing this 6 or 7 times a year with 6 or 7 different ideas. And it's just, even if we're an investor, we get told no a lot, just like every other entrepreneur that's on their early stage fundraising journey. It's too early. It's not a fit. We are okay with rejection. And so we understand how founders think and how they need to, and what requirements are needed to feel like the company is in a good place to actually be an investable platform. And so we think that it's both a really unfair advantage on building a really strong founder network. And then it's also, we have a significant amount of just idea flow and insight that we're able to obtain that others don't, because we're actually in front of customers, we're in front of founders, we're recruiting. And so that's where there's just a lot of information gathering. And that's just it's a different way of thinking about funnel and idea formation and top of funnel. We're just doing it in a fundamentally different way. And it's not easy, right? I wouldn't say if I knew kind of what I know now, then would I go start a venture studio? I would seriously question how much time it would take to do 12-hour days, 7 days a week. There's no time off. So we are very much in the trenches, but it's been a great journey so far. It's been a little bit over a year, but yeah, to your point, we feel like it gives us an unfair advantage when we think about later stage investment, and then when we think about just where the market is heading.
No, when we spoke earlier this month, I think you had said to me that you've spun up 6 companies already with the Venture Studio. Could you tell us about a couple of those, like just to give the listeners a sense of them?
Yeah, we had a pretty broad. I mean, when we think about the studio, we spent about 6 months just writing, right, coming up with kind of like a word mash, right, or like a word mashup. Like, what if we could do this for this business? Where do we think the world will be in X number of years, and then work our way backwards from there. Over the last year, we've incubated 6 companies. They all have names. They all have CEOs. Each one of them went through their own deep exploration, white paper development. Really, we call the white paper just it's the landing place for all of the ideas, insight, intelligence, research, and it's in one big document, right? And we use that as kind of our master sheet to really kind of reference back to the original idea. Why were we here? What was our insight? How do we feel like the idea has evolved? And so the last year has been really interesting. We've incubated 6 businesses and 3 investment platforms. So it's a total of 9 companies. The investment platforms are in credit, in vol, and then we're launching a venture fund. So we're considering those separate platforms. The credit platform is focusing on very kind of non-sexy cash conversion cycles and factoring for utilities and rebates and utility credits. And we recognized that there was a gap in the market for, meaningfully underfunded developers that build physical resources like solar, batteries, heat pumps, geothermal, and utilities where it takes them a while to write a check for a rebate or an incentive. And all we're doing is stepping in the middle and pre-funding utility rebates at like what looks like high yield credit, which is ultra low risk. And with the technology component, we can validate that the thing was actually built and it works and it's not fraudulent. And we basically see the opportunity to reduce cash conversion cycles. Our customer and our counterparty risk is against the utility, which has, basically what looks like AAA credit in many cases. And so this is really an opportunity that we saw talking to early stage developers and asset deployers saying, we're out of money. We don't have a lot of balance sheet. Banks won't lend to us because we don't really know. They don't really understand our business. And so we think that there's a couple $100 million of credit that we can deploy under this platform called Turtle Hill Capital. So we're very excited about that one. At the same time, as we were recognizing the development of new battery storage in the U.S., we saw a major gap in how batteries are hedged, right? Unlike other assets that have more duration, A, and B, a more well understood generation profile, batteries have majority of their revenue comes from either resource adequacy and capacity markets or merchant exposure, where they're just subject to like real-time cash market conditions, which is a challenge when you're looking at batteries for tax equity. In the US, we have tax equity market and the ability to basically monetize portion of the investment as a tax credit. And then there's the opportunity to leverage the asset and borrow against it. What we've seen in a lot of markets in the US is that there is very limited long-term hedging that would allow a battery to obtain tax equity or some type of leveraged finance play. And so what we did is we launched a platform that basically allows batteries to access that capital market by getting into a structured tolling agreement with the battery. And so what we do is we do a fixed for float revenue swap with the battery. Battery has fixed revenues for X number of years. We receive the variable revenue, and the goal for that is to trade around that position. So it's a long volatility. It is a long duck curve transaction, and so our exposure is to get long the duck curve. And we believe that investors that want exposure to the North American electricity markets, this is the best way for them to do that. So we're thinking about how to syndicate that investment and securitize that investment to allow either high net worth investors or Wall Street to access that exposure. And then the third capital platform or financial platform is just a standard venture fund. We are probably earlier in our thought process around that, but we're kicking off a venture raise to go and support Series A and Series B companies. So that is the kind of the right side of the business. It's around thinking about these are not venture funded plays per se. These are more platforms. These are more businesses. But we felt like we had a unique opportunity to go and develop them, and we did. And so that's kind of on one side. On the other side are the pure play incubations. And we spent a lot of time looking at climate adaptation, thinking about how the world, especially in the US, is going to adapt to new climate normals. And we circled around a concept that has been around for quite some time in the insurance space around parametric insurance solutions, which are event-driven insurance contracts and coverage. And our insight was power grids are becoming less stable and less reliable. And so we launched a power product called Grid Protect, which covers small and medium-sized businesses for power outages that impact their revenue, right? So we're looking at retail, hospitality, bars, restaurants, that type of thing. Where power goes out for a certain number of hours for one reason or another, they lose revenue. So that platform is called Adaptive Insurance. It really is thinking about launching more parametric insurance options around fire, flood, non-catastrophic policies, but things that we say are gap insurance policies, but are not covered under business continuity or business interruption insurance. And in the US, we're seeing one of the major largest components of inflation that we saw in 2023 and 2024 was insurance, actually. So it wasn't really food or energy. I know it's somewhat excluded, or travel. It was very much in insurance. And so we thought the market's going to change for insurance. Insurance is getting more expensive in states like California, Texas, and Florida from climate change. And so that platform has a reinsurance. It's an MGA. And that platform is called Adaptive Insurance. We're very excited about that one. That is in market and closing its first seed round. And the team there is like deep insurance experts. So that's one of those ones where we found a great team. It's an Austin-based company. We're very excited about that. We think that there's a huge opportunity for climate risk management. And it's also a data platform. We'll have a ton of first-party data on location-specific outages. And so it really helps us both come up with new ways to underwrite risk and then be able to have data to prove it and really ultra low cost, be able to dispatch policies in cash, right? So you don't have to wait for your money, right? The things come, parametric policies pay out the same day. So it's a major improvement to traditional insurance. So, but I'm not an insurance guy, but our insight was climate adaptation. We found the right subject matter experts, and that's kind of how some of that magic happens. The other platforms are in other various stages of incubation. The next furthest along is a platform called RAD. RAD was funded from CoinFund, which is a Web3 DeepIn platform to enable climate censoring. So it's really around identifying ways to use the DeepIn business model, which is decentralized infrastructure networks, to enable the community to actually go out and buy censoring hardware for weather events, drought, electroconductivity in soil, basically censoring the physical world and providing a protocol to be able to pay for that data and sell that data to, folks that actually care about that information. So traders, risk managers, insurance companies, cities, states, federal. So that platform is called RAD. That has a CEO. That company's based out of Miami. They're doing both fixed sensors and mobile sensors, really looking at how to reduce the feedback loop for getting ground truth and observation data, where you're not having to rely on satellite imagery and very expensive imagery. So it'll both be imagery as well as traditional fixed sensors. So that's RAD, and that was an exciting one. Really, our insight there was if we can reduce the feedback cycle on ground truth and ground observation, we feel like we can improve models that are leveraging first-party data for the future of how AI is able to do prediction for climate risk, right? So we have weather balloons, we have legacy data, we need better ground truth information to be able to support more accurate modeling. So that was the insight, ground truth for more accurate modeling. And then our CEO came in and was like, hey, there's real customer demand for protecting the coastlines, for identifying if there's issues in water quality. And so really thinking about use cases that are very specific to hard to censor and hard to acquire real-time information. So that company's called RAD, again, based in Miami. Tej is our CEO. That came together very quickly. That was kind of an anomaly where that business was funded before there was a team in place. So we had an investor that was very excited about leveraging DeepIn model and climate. And so that platform was funded before a CEO came in. We think that's probably fairly anomalous, but we do believe as a venture studio, there's a number of investors, especially in the venture community, that would love to see a business launched, but don't have the resources internally to go out and support early stage team development and kind of go to market. And so we use that as more of a test to prove that you could pre-fund some of these concepts and partner early with a third party investor and really kind of help accelerate the go to market of some of these platforms rather than spending 6 months raising capital. The capital is already in the bank and they can go out and start building. So that one's an interesting one, very exciting. And I'll go quickly through the other three.
Yeah, that'd be great.
We had a really good idea around gaming and creating a game studio for climate. One of our insights was that climate and education, like there's no Oregon Trail for climate, in our opinion. Oregon Trail was a game from the 1980s and 1990s that was in every school in the US. And it really kind of helped inform children around like what the Wild West looked like and what happened during the early 1600s, 1700s in the US, early 1800s around kind of like moving west. And I think that we have seen a number of challenges in convincing the global community that climate change is real and it's not a conspiracy theory from some political group. And so we thought, what if we could create a play to learn and play to earn game that has a climate story? And that insight was originally developed through what if we could gamble and bet on the weather peer to peer. So it started as an idea around weather is becoming more like of a topic of conversation for everyone, but more than it ever was before. So the insight was weather becomes a daily conversation. How can we monetize that attention to weather? And so we spent a lot of time in fantasy football and fantasy sports and thinking about the convergence of daily fantasy and weather. And we went to market with an idea and we went to consumers, we went to test it, and everyone's like, had like a violently negative opposition to that concept. They're like, we hate it, do not do it, no one's going to use it. But we still thought that there was something interesting because people were like, well, I would love to get involved and learn more about weather and learn more about climate. What else could we do? And so we kind of adapted that idea into a game studio with the theme of the game, similar to SimCity, of building resiliency and building sustainability in cities and leveling up and creating a social game. And so that platform is called C6 Studios. It's run by a former very deep game designer that understands game mechanics and viral loops. And if we're successful, we hope to be one of those platforms that can be in schools, education, but also be a very fun game to engage in, similar to like Farmville in the early 2000s. Very climate education-based game to help really engage communities around climate action. So that's C6 Labs. Really quickly going through two or three others. In the U.S., we created the U.S. launched the IRA about a year and a half ago, which is the Inflation Reduction Act. It is very complicated for consumers to understand what they qualify for and what they don't qualify for. So we launched a platform called Home Hub /Hint, HINT, which is the former head of OhmConnect, which was bought by Google and was really building a business around the Nest thermostat platform, is launching a in-home energy concierge using kind of basically a fintech platform to enable renters, homeowners to figure out what they qualify for and do it automatically, right? Automatically qualify, automatically support rebates. And so that platform is really around extracting value from a very complicated IRA. The next platform that we're launching, again, we're kind of going in different series here, is a platform called ClearCurrent. ClearCurrent is a business that is focusing on creating a ERP for large load customers.
Could you just tell everyone what an ERP is?
An ERP is like an enterprise risk management platform, right? It's really kind of an all-in-one dashboard, if you will, solution that brings in disparate data sources and allows a CFO or a head of procurement or someone in the finance group to really kind of manage all of the risk associated with a specific set of business practices. And so our insight was data centers are big energy customers. This was before the data center kind of explosion in the US, explosion being kind of like the idea around how much load data centers we're going to use. Our insight was data centers are buying power direct. They have multiple bills. They have bills across the whole US. They're multi-geography now. They use large amounts of energy. Energy is expensive. It's hard to understand. There's errors in bills. And so really this is a platform that helps aggregate all of the disparate data sources for a data center or a large load customer and allows them to manage their reconciliation process and the accounting process in a day versus a week or a month. The idea there is that once you build trust with large load customers, it gives you permission to think about efficiency, optimization, procurement, and really kind of opens the door. It's the wedge to open the door into a much larger opportunity around deploying physical resources, optimizing contracts, and then identifying the best hedges for these resources. So that's
so
Clear
really,
Current.
what you're saying there is really about actually improving what they've got, but ultimately perhaps transforming what they're doing.
That's right. It's like a robo advisor for energy, but also accounting system, right? So it's kind of both. The accounting system is first versus the trader, if you will. So that one's interesting. That was launched through a thought partner with one of the largest hyperscaler customers in the world. And they basically said, we have a huge problem. We're spending 4 weeks a month doing reconciliations. We've got 10 retail energy providers that are sending us bills. We've got 17 PPAs from different developers. We don't even know if we're in the money, out of the money, making money, losing money, and the problem's getting worse. And so very simple. We're like, we can solve this. We've done this before. This is not a new idea to be able to do a trade capture system and a trade valuation system, but it's just with a new use case and a new customer. So that's the fifth incubation. And the sixth incubation is a platform called Digital Offshore, which is a business that is focusing on some of the major constraints on how data centers are being deployed in the US. The challenge in data centers is around entitlement and procurement of energy resources because the power grid in the US is completely constrained. And so our insight was, what if we could use offshore oil and gas energy infrastructure that's already there and basically build modular data centers in places that were not able to be built before. And so that is Digital Offshore. It is basically leveraging oil and gas resources offshore in Gulf of Mexico and North Sea. It is combining it with carbon capture and CCS developers, which are desperate to find more point carbon solutions in areas where they can actually do sequestration, and basically applying that concept to building high performance compute, 100 plus megawatt data centers on abandoned and decommissioned oil and gas infrastructure. So think data center plus oil rig equals a very cool use case. And so that platform is called Digital Offshore. That platform just hired a CEO that used to run the Edge platform for one of the larger hyperscalers globally. And that platform is just kicking off. Our insight there was, how can we figure out ways to have adaptive reuse of legacy infrastructure without having to pour another couple million tons of concrete? Data centers use a lot of land. They use a lot of fresh water. Basically, they drain resources on land, and it creates major constraints. And there's a bit of an ethical conversation around who gets the next megawatt. And the data center, if we do it offshore and microgrids, we're not competing with terrestrial resources. So we're not extracting value from the commons, if you will. And we think that's our fastest way to scale high performance compute and do it in a way that is not depletive of traditional kind of terrestrial resources. So those are the 6 incubations. We have about 30 that we're working on in different stages of development, some in the voltage support side. We think grids are going to have more challenges on voltage support as we move to an inverter-based grid. We're looking at solutions there. We're looking at other more technology-related solutions in cybersecurity. We recognize the critical human infrastructure has major attack vectors and can really kind of disrupt economies, and those are the least protected resources in the country. The incubations that we have post the companies that we've already launched range from cybersecurity to protect critical infrastructure all the way through figuring out how to manage voltage support for renewable resources. And so we have a pretty broad scope of different ideas. And we spent a little bit of time doing kind of the big swing concepts, right? So a lot of the solutions that we want to develop are pragmatic, practical, they're real world. We don't have a CapEx heavy incubation or venture studio. Our goal is to not think about deep tech. It's really around software, fintech, marketplaces, adjacencies, basically utility derivatives. Some of them call them picks and shovels approach to energy transition. We're not developing the next fusion reactor. We're not developing the next deep laser technology. I think our focus is we see gaps and dislocations in the market, and we want to build and fill those gaps. And really, we struggle a little bit with thinking about a 10x improvement or a 10% improvement. And so that's the continuum is the things that can provide a 10% improvement might actually be real good businesses, but they're not going to fundamentally change anything. They're just going to be a slight process improvement. And the things that have 10x improvement are things that are non-obvious, and they might be contrarian, or they might be something that requires significant capital investment. And so we have to kind of thread the needle between thinking about things that are above a 10% improvement, but not necessarily needing to be a 10x improvement that requires billions of dollars of capital to get to market. And so that's always our struggle: is it big enough? These are all $1 trillion total addressable markets, but is it big enough to really spend a lot of time on? So that's been a fun problem to solve.
Yeah. So what I'm hearing is that like having like a large addressable market is important, but also having a big impact. And it sounds like you've just shared a very diverse landscape of projects, Evan. What would you say, apart from the things that you've just said, that comment to all of them, it being, about software in energy broadly speaking, what is it about all of those that got you interested or that lights you up about them?
I think that they were, for us on the venture studio side, we have our insights, right? These are insights coming from myself and the rest of the team. I think what gets us excited is when we find someone that, kind of going back, we feel like we are in a business of ideas, people, and capital, right? And when our ideas are validated by the other two, that's what gets us excited, right? And so we spend a lot of time talking to founders, entrepreneurs, and other investors, and we do a little bit of this kind of like roadshow, right, if you will, where we kind of give them a flavor of the things that we're spending time on and doing deep explorations in. And we watch people's, we do it in person, we do it on Zoom. We watch when people kind of like, eyes light up or eyes open up, or they start digging in and listening and asking questions. And that sometimes is enough to get us, the world is about momentum. It's about a feeling. It's about a vibe, if you will. And so we think all of these ideas are great ideas. We think all of these need to be part of the landscape of companies. But once we are able to validate that through our research and our conversations and our outward facing kind of conversations, that's what gets us very excited. Because without the team, these ideas don't live. Like if we can't convince someone else that this idea is something they should spend the next 5 or 10 years on, and we spend weeks and weeks and weeks and weeks talking to people about these ideas, and they're like, and nobody's picking up on them, that it could be one of two things. One, the idea is so out there that no one gets it yet. But we really do feel like without the proper co-founders in these platforms, these ideas are worth very little, right? If you think about like just the idea by itself, right? It's just more of a thought exercise, think tank, etc. So they do seem a bit random across insurance, ERP, gaming, data centers, sensor networks, but these are all coming through insight and discussions around where we think the world needs to be. So digital twins, increase information, first-party data, reducing risk, thinking about the world in those lenses. That's kind of how we're able to extract these company ideas, and that's what gets us excited. And so the validation component and the process of studio incubation is about idea, validation, checkpoint, idea, team, validation, checkpoint, capital, validation, checkpoint. At that point, it becomes a thing, right? We will it into existence through a process. And if it doesn't make it through the process, it goes back on the shelf, right? And collects dust. But eventually it comes back, right? We've seen that happen now multiple times where the team gets very excited about these ideas. And we have a broad team now. We have 9 people. And this is it's a creation studio, right? We're creating concepts, we're creating ideas. There's internal momentum, there's external momentum. And then we feel like they've hit a critical mass. They become a thing. Institutionalizing that process is something that we recognized we needed to do in order to build the idea factory. Otherwise, it becomes kind of a random, more random, and we want to recreate the magic by doing it through a process, right? Rather than just some we're at a happy hour and we met a guy and we met a girl and they really like this idea and it just came together. That takes a lot of fate and whatever. There's a lot of external factors that make that work. We want to try to make our own luck and do that through a process.
That's all for this episode of UnBlock'd. Please check out the show notes for information on Power Ledger and other contact information. We welcome your comments and feedback, and please hit subscribe wherever you are listening. This podcast was produced by Podcast Done For You. We look forward to your company next time on UnBlock'd.